Okay, good morning, everybody, and welcome to today's small business webinar. My name is Paul LaChapelle. I'm with Montana State University and very happy to welcome you today to our August 1st webinar. I'd like to remind you all that we are recording today's small business webinar, and we'll be posting that archive link to our website. Today's webinar is sponsored by the Small Business Development Centers, which are affiliated with the Montana Department of Commerce and the U.S. Small Business Administration, Montana Economic Developers Association, MSU Extension, with additional support from Great Falls Development Authority and the University of Montana. If you have any tech support questions, you can email or call the number that I have there in the Q&A box. You'll also have an opportunity to ask questions throughout this presentation, so you can do that in the Q&A pod on the bottom left of the screen. So now it's my pleasure to introduce today's speaker. Colin Lee is with Cogswell Insurance Agency based in Great Falls, Montana, and he'll be talking today about insurance for small business, and I'll turn it over to Colin. So thank you for joining us today, Colin, and take it away.
Hey, thank you, Paul, and Jason and Debbie for kind of getting me going on this, and welcome everyone. Thanks for joining. So as Paul said, my name is Colin Lee. I'm with Cogswell Insurance out of Great Falls, Montana, and I wanted to put on this slide just a handful of companies that we represent. Obviously, not all of them are on there, but you can kind of see there's quite a few that you might be familiar with. Also, kind of wanted to talk to you a little bit about the difference. We're going to discuss small business insurance, and so kind of talk about the difference between personal lines versus commercial lines, and then also you can see with all the different carriers on the page here, the difference between an independent agent versus a captive agent. An independent agent has the ability to go out and reach out to different carriers and represent them, and then offer those products to their clients. Captive agents, a lot of times will work exclusively with one carrier and represent that one carrier. So that's kind of a little bit of difference on the agent side of things. But anyways, just again, welcome, and I kind of want you during this webinar to really think about what your business would look like, and how insurance might apply to that business. And if you have any questions along the way, please, as Paul said, just throw those in the message box, and because every business is different, and so as things as we kind of go through this, you might have some specific questions for the type of business that you're looking at, and we can kind of maybe go down that trail a little bit if we need to. And so we'll kind of get started here. We have some objectives today. We will cover is we'll identify the common types of insurance requirements for a small business. We'll identify other types of insurance for a small business. So when you meet with your agent and you're discussing your business, there's some, like I say, there's some common insurance types, very standard stuff. And then there's stuff that's a little bit outside the box, maybe some gray areas. Might be something you need. It might be something that you don't need, and so those are all important conversations to have with your agent. And then we'll just explain the importance of insurance for a small business. So next, insurance for the small business. So there's 5 key areas. Number 1 is the type of business insurance one should consider. So every business is different, and so we got to kind of figure out the types of businesses we have. Number 2 is the reason for business insurance. Number 3 is the location related considerations. And number 4 is just selecting the correct policy, selecting an agency that might fit what you're doing, and then an agent that you trust to be part of your team.
And Colin, I'll just interrupt if I could for just a second. I just want to say that the formatting is a result of the upload on my end, and that your slides looked very good and were very professionally prepared. So I just want to let folks know that I'm the onus is on me for the formatting of these slides. So just sorry to interrupt, but just wanted to add that.
Hey, no worries, Paul. And as long as the information's there, we should be good. But yeah, it is a little confusing at some points there. But hey, so first let's review. So we talked about the common insurance, and we've also talked about some of the not so common. But I want to insure some different types of business insurance. I want to kind of go over that right now. And the first one you can see there's property insurance. That's a very common type of insurance for all businesses. So most businesses have property by far, but the most common for a business is liability insurance. Every business has to have liability insurance. Another common one is business auto, and you can see that below there, and workers' compensation. Those four are pretty common. And then I have kind of professional liability insurance in there. You can see that. That's common for some industries. Professional is anyone that maybe has a degree or a license or is paid to give advice. I always say if you open your mouth for a living, then you probably need to have the professional liability insurance. And then we got umbrella, which that's a common thing now. We're seeing more and more of that with this the kind of environment that we live in, and lawsuits. Umbrellas can come in handy. A lot of times a policy can be exhausted, a business auto policy or a general liability policy with one claim can be exhausted, so that umbrella gives you a little more leverage when it comes to a claim that's brought against you. And then we got key person, and we'll talk a little bit more about these later. And we got surety bonds. So some examples of the first of property insurance. So we talked about that being common. Property insurance is common. We have the commercial buildings. That's something that we see, and then business contents. That's everything that's really inside your building. Three of these other property coverages, these are just examples, but they're not so common, and they might be common in certain industries, but in the marine or equipment, that's not common for all businesses. But if you're a contractor, that you might just have a property policy with coverage for in the marine or equipment. Installation floater, another one that's not common, but if you are, again, a contractor and you're bringing material from your location to the job site or in a truck or wherever that might be stored temporarily for a project, that's another coverage you're going to need. And then builder's risk, in the event you're going to build a new building, you're going to need or require a builder's risk policy for that. Lenders also will require you to have property insurance. Some lenders might even require you to have like a business income policy, where in the event your business is disrupted, maybe it burns down, you're a restaurant, and now you're not making any money. The bank still wants to be paid, so they might require you to have a business income policy. And then last is in the event of the owner's disability or death. If I'm a banker and I'm betting on you, I like your business plan, I like you, I like your experience, I may be willing to give you a lot of money. But what if you died tomorrow and I gave you all this money? How am I gonna make that back? So we can kind of talk about that's going to be our key man policy, or key life insurance policy. So some examples of liability insurance. We kind of talked about the common one, general liability insurance. That's the most common business insurance. And these others down below are stuff that it might not be so common. It might be a little bit outside of the box, depending on what kind of business you do want. So, for example, EPLI. What is that? That's your HR insurance. That's employer's practice liability insurance, and that is going to be your HR insurance in the event that you had a wrongful termination against you, or you had maybe you didn't hire someone and a lawsuit was brought against you due to some kind of discrimination, where it might be age discrimination, it might be race, and so that EPLI policy does cover you in those events. It also covers you in events where you see a lot of the Me Too movement with sexual harassment. And so that's something that in the event your company is getting a lawsuit due to sexual harassment, whether by you, by one of your employees to an employee, or an employee to maybe even a client, or a manager-employee type relationship, that's going to be the coverage that you're going to want for those for those cases. And then cyber, you've all probably saw in the paper and on the news all these different businesses. Maybe you got a different credit card, and because you're some store got hacked and they have your information, so they had to send you a new card. But the cyber security kind of protects you against that in the event you are involved in a claim. So another important coverage for a lot of retailers, a lot of businesses that have a lot of transactions. And crime is another one that's not so common, but if you do have maybe you're worried about employee theft, you have assets, people bringing in cash, or if they're just maybe they're cooking the books, or they're just kind of skimming some money out of the company month by month, and after maybe a few months you realize, but now it's $100,000 is lost. So your crime policy, depending on the limit you select, that could help cover some of those claims. And then we kind of talked a little bit about professional and EO. That's in the event that you open your mouth, or you're a licensed professional. For example, insurance agents are all licensed. We all have E&O policies. Doctors, lawyers have E&O policies. Architects and engineers have E&O policies. So there are just some examples with that. And then directors and officers. A lot of you might find yourself on a board someday for a company. And a really important question is, does that company, maybe it's a nonprofit, do they have directors and officers coverage? Because in the event that there is a lawsuit and the directors are named in that lawsuit, is that policy going to cover them? And that's something you definitely want to explore when you're moving on to a board. And then liquor liability. So general liability is going to cover your slip, trips, and falls, if stuff like that. Your liquor liability would be more for your restaurants and bars in the event that someone does have too much to drink. They come in and take off. That might be a situation where you're gonna have a huge lawsuit, and they're very common, especially in Montana. So a lot of the bars and a lot of the restaurants are really trying to figure out ways there to stop that, whether they're offering taxi rides, or they're taking keys if they can, and just trying to do the best at managing that, because in the event that person does take off, even if they didn't have, they had all their drinks at home and then they came into the bar for one, that bar, because they served that drink, would or could be liable for that liquor liability claim. Business auto, any auto that's really used for business, it should be covered on a business auto policy, due to the fact that a lot of personal lines auto policies might exclude any kind of business operation. So you want to be careful with that and make sure you got the business auto policy. And then the umbrella, we kind of briefly touched on that already. Workers' compensation, that's another coverage, a very common coverage, and that kind of pays for your injured employee for the medical bills. It also pays to retrain them. It's required by the state of Montana, and those coverages you can get those through Montana State, through the Montana State Fund, or you can there's other carriers that offer work comp as well. And I just real quick, every company has a safety rating, and so when you start out your company and you start out with a safety rating of a 1, and what does that mean? That means whatever your rate is that you pay in work comp, they times that rate by 1, and then that is your rate, right? Your rate times 1 is your rate. But in the event you have claims, that rate might change from a 1 to, say, a 1.5, and now you got your rate times 1.5, and that could, now your premium just went up 50%. So safety is becoming more and more important on the work comp, and I kind of have OSHA up here too. You can see that. That's another thing too. If we're not being safe, and we do have over 10 employees, OSHA might, they can definitely come down and and they can fine you as well. So not only will your safety rating be moved, but OSHA could be fining you as well. So next we'll go to the key person policy. So I want you to kind of think about this. Do you have a list of names who could run your business, or that you would trust to do so if you were ill for an extended amount of time? So let's even say, or you have an event of your death. So you have a business that maybe you and your brother set up, and now you're 50-50 owners, and one of you die. Well, I know, like for me, I have a brother, and we could go into business and we could look at some things, but maybe my brother doesn't want to really be partners with my wife. Maybe if my brother wants to work with me, but not so much my wife. So let's say that I die. One of the ways you can use this key person policy is in the event I die, the life insurance policy would pay the 50% of the business that I own, would pay that to my wife, and then my brother would retain 100% of the business. And so it kind of gives you that flexibility if you're whether it's a brother or a partner or whatever, is it gives you that option if that partner something were to happen to that partner, you could pay off that partner's kids or their spouse or their significant other or whoever that would need to be paid off, and then it would allow you to have that business. So we could talk about so employee ownership. That's another way to kind of help out with your business. Would you be you could sell would selling to the employees provide income to a spouse? We kind of talked about that. And then life insurance would cover all your liabilities of the business too. You want to make sure you have enough liability to cover those liabilities, so your family or spouse don't have to worry about that. Surety bonds. So surety bonds is a little bit different than insurance, but in surety bonds you have a third party, a second party, and a first party. And the third party is the surety. The third party is the company. Let's say Travelers is your bonding company. So Travelers is your surety. The second party is the one doing the work. That's the contractor, we can say. And then the first party is the owner. And so insurance and surety bonds are similar, but they're not quite the same. And a lot of, like for example, our office, we have a bonding department. So I don't write bonds, but we do have a bonding department that they specialize in bonds. And they're a little bit different than insurance. In fact, if a contractor has a claim on a bond, the surety will pay the owner, but then the surety will come after the contractor for whatever it paid the owner. So it's not quite an insurance policy. It's almost like a guarantee, and you can see satisfaction guaranteed. It's kind of a way of an owner getting a guarantee that the contractor is going to perform the work and will finish the work. And if not, the owner will be reimbursed by the surety. Okay, so here's a few discussion points, and if you guys can, I know there's just a few on the line, but if you guys can, maybe just give some examples of specific insurance for the type of industries below, and we can start with restaurants. I'll kind of do the first one, but for restaurants, what do you need for insurance, right? You need a property policy, most likely, because you have all your kitchen equipment. You have all your booths, you have all your utensils, you have your inventory for your food, and you have your building, unless you're leasing the building. You'll need a GL policy, a general liability policy, for those slip, trips, and falls. If it's an icy parking lot and then somebody slips on the way in, they might sue you for that, and that could be $50,000, it could be $1 million, who knows. You'll need a workers' compensation policy. That's one where for all your employees, you might have 20 employees, 10 employees, or 50. And then you might also need liquor, depending on what kind of restaurant you are. If you're selling alcohol, you're going to need a liquor liability policy. And then we talked about EPLI, which is Employment Practice Liability Insurance. That is also something that you might need to protect yourself in the event that of wrongful termination or you didn't hire someone. You might not have even saw the application to hire somebody, but you didn't do it, and as a result, there could be a lawsuit filed. They say 80% of the time you'll win those claims. They're pretty easy to win, but they do cost a lot of money sometimes in defense to do that. And then cyber, that's your receipts. If you're taking in credit card information and you are hacked, your Montana law requires that you manage your clients' credit card statements and bills, and you have to send out letters, and you monitor their credit. So cyber is going to kind of give you some extra funds to help with that. It's about $100 a person. So you can imagine a large restaurant that takes in a lot of receipts. That can be pretty expensive. So cyber, in that case, you might need a larger cyber policy to absorb a potential claim there. Business income's another one that if in the event that you're down, you're shut down, maybe you had a fire in the kitchen and you're shut down for 2 or 3 months, you're going to want to subsidize some of those receipts that you were used to getting, because you're still going to have to pay your mortgage. You're still going to have to pay the banks, and sometimes you'll even want to keep some of your employees on staff in the event that when you're back up and running, don't have to worry about losing those employees. So kind of can you guys give me just a quick example of maybe a couple of things you might need for a construction company, a lawyer, or auto repair shop? Yeah, workers' compensation. That's right. Construction companies, a lot of times they need that inland marine, that equipment policy. So you're going to want to make sure they have equipment. Your lawyers, we talked about the E&O. They open their mouths, right? They're always giving advice. They definitely need professional liability. That's their most important coverage. And then your auto repair shop, they kind of have a niche, but they need a garage keeper's liability policy to protect the vehicles that they have in their care, custody, and control. So just kind of some examples there of different types of insurance. And then the reasons for insurance, business is risky, and not having the correct insurance could mean the end of your business, right? We all know that it's risky to get in business. We got a lot of things going on, and we just want to do what we can to protect our assets, protect from loss of income, maintain continued financing, and then protection from injuries or damages that might have been received or inflicted. Legal requirements, retention of employees, and then we talked about the business continuity, recovery from disasters, protection from errors, from errors and admissions in the event that you're an architect and you left out some kind of, you have a design flaw, and now as a result, there's a lawsuit brought up probably against the contractor who built it, and also against the architect or engineer who designed it. So then, as that process goes through, those claims can get worked out on who would be at fault or who should be at fault, and sometimes both pay. Okay, so on the we talked a little bit about location-related considerations. Lots of different types of businesses. There's home-based businesses. A lot of people think you can work out of your home. A lot of policies they actually exclude any kind of business operation out of a home. So you definitely want to make sure you check with your homeowners if you're running a business out of your home, even for business inventory or material. A lot of times people think that might be covered under their contents for their home, and sometimes a homeowner's policy can exclude that as well. So be careful of that. Retail business owners policy, we call them BOPs in our business. Those are our real small retail kind of Main Street type businesses. Pretty simple to set those up. They're not very expensive, and like I say, it's a good policy with lots of additional coverages that you might not ask for, but they throw them in there anyways, and you can pick them up for free. A commercial policy, a little bit larger than a BOP, but but they do have a little more flexibility in offering different types of coverages. And then your vendors, your kiosks, and for a little your guys that go to the fair and stuff, the carnivals and stuff like that, a little shorter period types of business insurance there. So when you're when you're selling a policy, you got to ask yourself, does it make sense? You don't want to ever buy a policy that is one that you don't want to become insurance poor, I guess, when thinking about a policy. That's really why it's important to trust your agent and have those important conversations with them. You want an agent that's more of an advisor and not just an order taker. It's really important to make sure that like we've kind of mentioned, some of the common types of insurance versus the more kind of outside of the box. You want to kind of weigh those risks a little bit. You can pick up every single possible insurance policy that you can think of. Maybe your agent recommends everyone for you. And then sometimes your agent might say, hey, well, here's the risk if we don't get this policy. And that's a risk that maybe you're willing to take because the chance of it happening are so small. And especially for startup companies, it can be really tough to buy every insurance that you might possibly need. So sometimes we'll start out a little might not insure all your tools, for example, and maybe we'll just do the liability. And then as you kind of get going, you start insuring your tools and your trucks and as you get more assets, you want to insure more things. So what do we do after the purchase? You want to keep your policies easy, accessible. Keep the phone numbers readily available for claims for your agent, and review the policy periodically, and make sure you meet with your agent from time to time, because things do change, and there's always something new. Maybe you purchased some equipment, or you changed your location, or even you expanded your business to the point where now you're not a small business anymore. You're a middle-sized, mid-sized business, or you're even a large business, and you're looking at a lot more in payroll, a lot more in sales, and those things can lead to audits in the future. And audits can be very expensive. So keeping your agent informed on your growth is really important on that. You also, one of the things that you might see, especially on like an auto policy, is financing. A lot of times, you buy a new auto and you have financing, right? But then you pay it off, and those are little things that you might not need that anymore. So we can take that off. You also want to make sure you handle you pay your premiums. Gosh, if you don't pay your premiums, that history kind of follows you. And so what happens is, as that history follows you, less and less carriers want to represent you, and you might have less and less options going forward. So that could be kind of a downside too, on moving your insurance or looking for other things. So assuming risk is kind of part of doing the business. We all take risks, right? And I always say in Montana, you really can't wait on the weather. It just changes so fast here. But think for a minute about like a roofer, that tears a roof off, and maybe they don't check the weather, but they tear the roof off and they try to tarp it or whatever they do. But then the rainstorm comes and the winds come, and it blows the rain under the tarps, or maybe it got in too fast, and now you got damage inside the house. You got water damage all over the house because the roofer maybe tore the roof off, and the rainstorm came right away and wasn't able to get the roof on. Those are kind of risks that a roofer might take. They might think, well, the rain's not going to hit here, or maybe they didn't check, or maybe they got so much going on, they just got to get it done. They're just going to take the chance. Insurance will pay for that. Another risk might be roofing in a cold environment. If you want your shingles if you're shingling a house, you want that to set up. You want it to be 90 degrees, so the shingles can set up really well and they won't blow off in a windstorm. Another one is concrete. When you're pouring concrete, if it's cold, those are all things that can happen. If it's too hot, it can crack. If it's too wet, it might not hold up on the strength. So there's all these considerations we have with risk, and that's kind of where it gets really important on the insurance side of things. So just a couple key points to remember here. We're kind of running to the end. Um, paying your insurance premiums on time will definitely help your reputation. And professional licensing may be required for some of your insurance needs and or surety bonds. Lenders might require your protection and insurance. Just minimize the impact risks that have on the ability to continue operations, impacts continued uh, financing, and it helps you retain employees, provides protection from liabilities. Your locations, facilities, autos, and types of operations determines the insurance we need. We kind of discussed that a little bit. So you want to evaluate your risks, ask lots of questions, compare policies and agencies, keep accurate records for claims. I always keep my claims for 7 years. We do that here. And I also advise my clients to keep their claims activity for 7 years. I just had one the other day, and it was a claim where it was filed 3 years after the claim, which that's for state law, it has to be filed. So it was filed 3 years after the claim, and then the client was served 3 years after it was filed, so giving it a 6-year period. And the funny thing is when that happens, you kind of forget about those claims that happened 7 years ago or 6 years ago. So it's really important to kind of keep that just in the event. You never know what's going to happen. And so you never know when you're going to get served or when a claim can be filed. Keep the emergency contact information available, and then always update any beneficiaries that you might need there. So, do you guys have any final questions?
Thanks, Colin. This is Paul, and maybe I'll start things off. I'm wondering if I've got two questions. The first one, what do you think is the most common mistake that small business owners do when it comes to insurance? Can you maybe just summarize maybe anything that you've already stated or anything that that you didn't cover? Most common mistakes.
Sure. I think the big one is sometimes they just want to get the insurance, get it set up, but I really think it's important for them to meet with somebody they trust. They have time to meet with and kind of go over what they want to do, the direction they want to go. A lot of times you'll see a business maybe set up a policy and with very little information, they'll set it up, they're good to go, but then 6 months later, a year down the road, they have a huge growth spurt and they don't tell their agent. They're not engaged with their agent, and so as a result, that year end happens and they have an audit, and that audit could be $20,000, could be $15,000, and it's usually due within a month, and that can be a really tough thing for a business to absorb that. And that's not for a lot of businesses. That's just for just a handful. But some businesses really they have great owners and managers, and they just take off. And it's just really important to use your agent as part of the team, and maybe have those conversations. And if you know you're hiring a lot more people, or you've added a lot more assets, or your sales are going through the roof, you might want to give a call to your agent, because eventually you're going to have to pay, and sometimes it's a little easier to pay as you go than it is to pay for it in 1 month at the very end of the year.
Thanks, Colin. That's good counsel. Good advice. So as a follow-up, can you talk about what's the most common reason that a claim might be denied or delayed? What are some things that some small business owners might want to think about in terms of filing a claim and why it might be denied or delayed?
Right. So, there's a lot of exclusions in policies, and so you want to make sure you're working with your agent to understand those exclusions. Sometimes you might be a contractor, and you might maybe you're digging up some dirty dirt, or you're in an area where there's pollution, and you're working with that pollution. Well, when you touch pollution, you own it, and most 90% of policies will exclude pollution. And so you want to make sure if you're working in that pollution that you have that policy, because that would be one where you might turn in the claim because you have a pollution claim thinking you're insured because you're an excavator and you got the general liability policy, but you find out later that you did not have a pollution policy, so there is no coverage for that incident. So that's one thing. Another one is if you had the pollution policy, um, it could be time sensitive. It could be a claims made policy where you have so much time to report that claim to your insured. So if you're kind of working through a claim, or maybe you're kind of going back and forth with some attorneys, your agent doesn't even know about it. You want to make sure you kind of inform your agent on what's going on, because in the event you get to a certain point in your policy, the policy might decline coverage based on the fact that they weren't not notified in a timely manner. There's a couple of examples with that.
Great. Well, thanks, Colin, so much for the great information. Again, we have recorded this, and we'll be posting this to the small business website, and you can see the link there in the Q&A box. Any final words in terms of if folks wanted to contact you for further information, how they could do that?
Sure. You know, if you definitely want to give me a call, you're more than welcome, and I'd love to talk to you about your business or what you want to do. Again, Colin Lee with Cogswell Insurance. Our number here is 406-761-5000. You can ask for me, or one of our associates would be happy to help you. And you know, it's okay to sometimes get a second opinion as well. You know, lots of time we kind of get stuck in one mold thinking that it is what it is, but sometimes it can be, there might be some better options out there for you, and sometimes it's a good idea just to explore those options.
Great. Colin, thanks again for your time and for all the great information. And again, we'll be posting this archive on the website, we will be hosting a webinar next month. That'll be Thursday, September 5th, 11 a.m., same time. Our speaker will be Barnett Sporkin Morrison, who will be talking about rethinking innovation in Montana. So we'll be having information about that upcoming webinar and webinars throughout the fall into the winter on the website. So with that, again, Colin, thank you, and thanks for your interest in the webinar series for those of you that are viewing this online, and have a great Montana day. Thanks again. Bye-bye now.
Thanks, Paul. Thanks, Jason. Thanks, Deb.